Hello guys and welcome to another deeper video. Today taking an in-depth look at BHP Group Limited, an Australian multinational mining and metals company. As of the 16th of December 2024, the stock is priced at $51.7 with a market cap of 132 billion. Their trailing 12 months price to earnings is 16.8 and their median PE over the past 10 years was 17, so they're trading at historical averages. Their price to cash flow is 6.42 and their forward dividend yield is 5.65%. Their revenue over the past 5 years has grown by 45.3%. Their net income has declined by 0.1%. Their earnings per share has also declined by 0.1%. And notably, the number of common shares outstanding is 5.07 billion, basically the same amount as 5 years ago, so no stock dilution. Moving on to the liquidity section, we can see that their interest coverage ratio is 24.37, meaning that they can easily cover their interest payments. Their quick ratio is 1.29, suggesting very good short-term liquidity. The long-term debt equity ratio is 0.36 and the debt equity ratio is 0.39, both suggesting a low debt load. Their cash from operations is approximately 18.7 billion, a plus 31.6% change over the past years. The cash investing activities is minus 8.8 billion, a plus 15% change over the past 5 years. The cash from financing is minus 11.7 billion, a plus 19.7% change over the period. The capital expenditures or capex is minus 9.3 billion, a 50% increase over the past 5 years. The free cash flow is 11.85 billion, a increase of 47% over the past 5 years. And now moving on to their financial ratios, we can see that the return on invested or return on equity is 18%. The return on invested capital is 13%. The return on assets is 8%, and the return on investment is 19.5%. Now, moving on to the stock valuation, we can see that after a DCF valuation using a discount rate of 9%, a revenue growth rate of 1% for 10 years, and a perpetuity growth rate of also 1%, we get a fair value of $64.11 based on a few multiples of 10, 10, and 12.5 respectively of earnings, operating cash flow, and free cash flow. We get a $52.96 fair value, and based on analyst expectations, the fair value is 55.43, giving us an intrinsic value of $57.47 based on the averages of all three numbers. Using a 15% margin of safety, you get an acceptable buy price of $48.85, making the stock a hold because it is trading near intrinsic value. Now, as for a short commentary on BHP. BHP is a mining company, as I've said at the start of the video, so this is not really stable. You have to be good at cyclical stocks. I don't really invest in cyclical stocks that much. In my opinion, from a short-term analysis, of course, is that they have bottomed this cyclical period. So they've reached the negative part, the most negative part, and now they're growing into a let's say upwards trend. Because the thing is, with all of these mining companies, it's all based on the price of what they're mining. So, for example, in the case of BHP, maybe nickel, maybe aluminium, whatever they're mining. So, if you have information on that, if you are more knowledgeable on that, then you can maybe do a play based on increasing prices in diverse set of raw materials. But from strictly a how do I put it, a omniscient point of view, from the point of view of the balance sheet and the financial statements, of course, they look like a company that has a clean balance sheet, no stock dilution. They are trading at a small discount to fair value, although not enough for a buy. Um, Now, if you think that they'll grow more than 1% revenue and you think they deserve more than 10 times earnings and 10 times cash flow valuations, then you could maybe buy them. But of course, this, as I've said, this is mining. This is, first of all, cyclical industry. Second of all, this is only for knowledgeable people. And third of all, even if you are knowledgeable, mining is still based on prices, and if prices decrease, because you never know, prices may decrease, prices may increase, a lot of things may happen. So I'm not in a position to give a an authoritative uh, stand on this company. I can tell you that, in my opinion, this is a hold. Uh, for cyclical companies, I use a much higher margin of safety because I'm not really the master of them. So I usually use 35 to 40% margin of safety to be sure. And so in this case, I can only tell you that it's a buy. Of course, you should do your own due diligence first. Now, as for when it's a buy, definitely a buy. I think somewhere in the $30 to $35 range, then that's easily a buy. But for now, it's just a hold, in my opinion. Now, thank you for watching. If you found this video helpful, please like and subscribe. And also check out my new investing blog featuring in-depth analysis from the link in the description below. Thank you for watching. See you in the next video. Bye.